Okay, welcome back everybody. Today we're looking at series 3 and today we're going to be talking about the stock in the bond market and what happened when the tariffs hit. Okay, so let's get straight into it. Okay, so here we go. Let's just look at what we have here. Let's just assume this is the stock market, right? So just ignore the numbers for now. Just look at I want to show you the principle. So that's the stock market, that's the bond market. Let's just ignore this for now. So this is the stock market, that's the bond market. Now, the normal situation is that when the stock market goes down, when people start selling shares, which is what happened in the US, when people start selling shares normally, then what the stock market goes down, right? So it was 500, it's come down to 100. Let me go back. So the stock market goes from 500 to 100. So obviously watch the bond market when the stock market goes down. So the stock market goes down, the bond market jumped up. Let's look at it again. Stock market goes down, bond market jumps up, right? That's normal situation. So when the stock market started going down, once tariffs were introduced and once Trump said what he's doing, people started pulling money out of their stock market. And I'll show you why that is the case, because of the uncertainty and because of the cash flows in the future were not now stable, so it was volatile. So people pulled money out of the stock market, and under normal circumstances the bond market goes up, because remember we looked at supply and demand, because if there's now more demand, then the price goes up, right? So the bond market goes up once people start pulling money out of the market, right? So here we go. So there's our bond market gone up. But now what happened when Trump introduced the tariffs? So this was the normal circumstance. When the tariff hit, okay, the stock market went down, but the bond market also went down, which is now uncharted territory, because normally people take money out of the stock market and put it into the bond market. So what was happening? Where did the money go? Because it pulled out of the tariffs, it pulled out of the stock and the bond market. Okay, the reality is that we saw money went to gold, because gold is the safest asset, safest haven, and we will talk about gold later, but I want you to look at this relationship here. Stock market, normal circumstances is that when there's a relationship between the bond market and the interest rates, right? So if the bond market goes down, the relationship is that the interest rates goes up. So under normal circumstances, when the stock market went down, then the interest rates, the bond market went up, interest rates went down. So when Trump put the tariffs in, we know that the bond market went down, which then means interest rates went up, right? And these interest rates are the rates which the consumers pay, effectively the mortgage loans. It is the rate that the market looks at. It's the long-term rates. Right? It becomes the mortgage rates. It's the rates. Now the worry was that we went from there and suddenly tariffs and interest rates went up. So that was a disaster, because it's unprecedented. Because normally we know the stock market is going to go down, but now we had higher interest rates, so that was a big problem. So we will look at this in future videos again, showing what happens with the higher interest rates. I just need you to see, what I want you to see from this video is that when the stock market under normal circumstances goes down, money gets pulled out of the stock market into the bond market, right? In the case of tariffs, that didn't happen. The bond market also went down, interest rates went up. That's why Trump had to effectively bring about a 90-day pause, because he couldn't, nobody expected that to happen. So if you understand demand, supply, stock market going down, and we'll explain why this happens and why the bond market went down in future videos. But for now, just want you to understand the relationships. There's a stock market, there's a bond market, right? The bond market is interactive with the interest rates. Okay, so that's it for this video.